In 1602, a group of Dutch merchants created something so powerful that 400 years later, it still controls your life. It made regular people rich overnight. It sparked the world's first stock market crash. It had its own army, its own navy, and the legal right to declare war on entire nations. And it was, on paper, just a trading company. Not big in the way your uncle's crypto portfolio was big for 6 months in 2021. Big in the way that makes modern billionaires look like they're playing with monopoly money, which, by the way, they basically invented. This is the story of the Dutch East India Company, the most powerful corporation that has ever existed. And the invention that started with it is one you use every single day, whether you know it or not. Here's the thing almost nobody tells you. This company wasn't just rich. At its peak, it was worth more than Apple, Google, Facebook, Amazon, and about 15 other trillion-dollar companies combined. And the secret to how they pulled that off? It's a trick so simple, so obvious that you'll wonder why nobody had thought of it before 1602. It's basically the "have you tried turning it off and on again" of finance. Stick around, because by the end of this video, you'll understand exactly how one piece of paper changed the entire world and why it almost destroyed itself just 50 years later. But before we get to the money, let's rewind. Because this story doesn't start with greed, it starts with spices. In the late 1500s, pepper, nutmeg, and cloves were worth more than gold, ounce for ounce. Grown men fought over nutmeg, the way people today fight over the last PS5 on Black Friday. And the only way to get it was a brutal, year-long voyage to modern-day Indonesia, through storms, disease, and pirates. One trip could make a merchant rich for life, but one trip could also bankrupt him completely, the 17th century version of "I put my life savings into one meme stock." So the Dutch came up with an idea that had never really been done before. An idea that would change the world forever. Picture this. You're a wealthy Dutch merchant in 1600. You want in on the spice trade. But here's your problem. A single ship might cost you your entire fortune to build and stock. If it sinks and a lot of them sank, you lose everything. If pirates take it, you lose everything. If the crew mutinies, dies of scurvy, or just doesn't come back, you guessed it, everything, gone. So individual investors were terrified. Too much risk for one guy on one boat. Very much a one-night stand energy investment. Huge upside. Decent chance you never hear from it again. Meanwhile, dozens of small Dutch trading companies were competing against each other, and against the much stronger Portuguese and Spanish empires. They were bleeding each other dry with competition while the real competition sat overseas. The Dutch government looked at this mess and said, what if we didn't do this alone? In 1602, the Dutch government forced all these competing companies to merge into one giant entity, the United East India Company. You'll hear it called the VOC. The VOC got a 21-year monopoly on all Dutch trade in Asia. It could build forts, raise armies, sign treaties, mint its own coins. It was basically a country with a business plan. Imagine if Amazon could also declare war on Belgium. That's the VOC. But here's the genius part, the part that actually invented the modern financial world. Instead of asking a handful of ultra-rich merchants to fund the whole thing, the VOC opened its doors to anyone. Rich, middle class, it didn't matter. You could buy a piece of the company, not a piece of one ship, not a piece of one voyage. A piece of the entire company, forever. For the first time in history, "I want a piece of you" was something you could say to a business and not get arrested. This piece of paper was called a share. And for the first time in history, thousands of ordinary people could own a slice of a giant enterprise, and if the company made money, so did they. This was the birth of the modern stock. Now here's where it gets interesting. Once people owned these shares, a new problem popped up. What if you needed your money back before the company paid out a profit? What if you wanted to sell your share to someone else? So in 1602, right in Amsterdam, people started meeting up to buy and sell these VOC shares. Prices went up. Prices went down. People argued, haggled, celebrated, and panicked all over pieces of paper representing ownership in a company. Basically, the world's first group chat that ruined friendships. That marketplace became the Amsterdam Stock Exchange, the first stock exchange the world had ever seen. And yes, it was in Amsterdam, a city already famous for letting people indulge their vices in a designated area. Turns out gambling on companies was just the tamer local hobby. For the first time in human history, you didn't need to own a ship, sail a ship, or even leave your house to get rich off global trade. You just needed to buy the right piece of paper at the right time. Sound familiar? It should. This is literally the app on your phone right now. Here's where the story stops being inspiring and starts being a warning. The VOC wasn't some gentle trading business. To protect its monopoly, it fought wars, burned villages, enslaved people, and violently controlled entire islands to keep spice prices artificially high. Its private army was, at times, larger than some European nations, and the stock market it created, it wasn't stable either. Just a few decades after the VOC shares started trading, the Dutch went through tulip mania, one of the first recorded speculative bubbles in history, where a single tulip bulb sold for more than a house. Grown adults mortgaging their homes for a flower. If NFTs existed in 1637, this is exactly what it would have looked like right before the entire market collapsed overnight. The same financial system that built unimaginable wealth also built unimaginable greed, exploitation, and chaos. That combination, massive opportunity and massive risk, has never really gone away. It just changed its name. Railroads, .com, crypto, same story, different century. The VOC eventually collapsed in 1799, drowning in debt and corruption, a slow, humiliating death. Like a relationship that everyone but the two people in it could see was over years earlier. But it left something behind that never died. The idea that a company could be owned in tiny pieces by anyone with the money to buy in. Every time you check a stock ticker, every time someone mentions the S&P 500, every 401k, every index fund, every diversify your portfolio. TikTok, it all traces back to a group of Dutch merchants in 1602 trying to figure out how to split the cost of a boat. So the next time someone tells you the stock market is complicated, remember it started as a way for 17th century Dutchmen to stop losing their life savings to a shipwreck. And it somehow evolved into your coworker explaining crypto to you at a barbecue. If you want to see how this system evolved into the modern stock market and the crash that almost ended it all, make sure to subscribe, because that's exactly what we're covering next.